Hello and welcome to another XRP update. Yeah, a bit of a sell-off situation today in the crypto sector. Nothing major. I mean, XRP shows a 0.3% decline here on Tradingview. That is nothing major. And so far, all scenarios here remain valid. XRP remains well above Fibonacci support, which you might recall it from previous videos, is located between $1.21 and $1.55. That's our standard support zone here on this chart, and we could get a fifth wave to the upside from here, which might take us towards the $4.20, $5 area. If we get the fifth wave started, that's still a bit of a mystery. Have we started the fifth wave or not? I can tell you that on the smaller time frame, there's just no evidence for it. I am tracking a potential leading diagonal to the upside, maybe as wave 1 of 5, but it's too early to really confirm it. However, the price is forming higher highs and higher lows, and we want to take a look at the shorter time frame now to get an understanding of which levels need to hold and which levels are maybe not so important, which are the most important levels, and so on. Yeah, because just to give you an example, just by breaking below a small micro support level, well, that would not change the overall structure or scenario, right? It might change the microstructure, really the nano patterns, but they really often don't have an impact on the bigger picture. Now, before we do that, just a quick reminder for anybody who's new on the channel, for me to keep an overall focus on the yellow scenario that allows for one more high into that kind of $5 area, maybe even 5.65, the price must hold above the 50% retracement of the third wave. Hold on. Didn't want to grab that. Of the third wave that started down here in July 2024. So we measure the 50% retracement of that low, and it shows us the $1.21 level. As long as we can avoid a decisive break below, the overall bullish structure remains intact. Don't want to talk too much in detail about that. We did that in previous updates. Now, this is the structure, one of the structures we can track here from the low in April. Definitely a very, very fragile structure, and a structure that has not really confirmed that the next, let's say, the next part of that uptrend has started, right? Because we have seen a very choppy and overlapping structure, not characterized by 5-wave movements. So we don't really have trust in this structure as such. Yeah, it's super messy. Well, you will get people who will call that already a 5-wave move up, I'm sure. I mean, it could be a wave 1, a wave 2, 3, 4, 5. I mean, is that valid? It is, okay? It is potentially a valid structure, but that's precisely why I have here a larger support area, which is between $1.84 and $2.01. And actually, to capture that potential, I might want to move that a little lower because it then gives it a little bit more space in case all of this is a wave 1. I don't believe that, but you sometimes get these patterns that really look like these ascending wedge patterns. And it's not even a very clear one, but yeah. Anyway, I wanna just give you a support area to watch in case the price breaks below these previous swing lows, and then we can focus on $1.74 to $1.95. I think it makes sense to adjust that slightly actually to the low from the 7th of April. That's similar what I'm tracking for Bitcoin on the short-term bearish count, that we have this entire distance which might need to get corrected. And if we break below this support zone at $1.74, well, then another low in this larger structure becomes likely. But as I said, even then, if we hold $1.21, it's all okay. It's all still potentially bullish, yeah, just on the larger degree. Of course, in the short term, it might mean that we go maybe to $1.30, $1.20, but the key level that helps us distinguish between direct upside and a larger correction, well, that is the $1.74 level. Yeah, this is key Fibonacci support that keeps the blue scenario intact, which is directly bullish. I already added here in the last few days a potential pathway for higher prices, but mentioned to you, this is all based on corrections. So I don't know. I mean, there isn't really any clear upside momentum from any of the lows, yeah. And this pullback has been so deep, so the 1-2 setup here That is not really realistic. Could we be in a B with maybe, but then we're testing those lows. I don't think that nanostructure makes sense in light of the latest strong pullbacks. It is, of course, I don't, this is getting super, super messy now. And I mean, corrective structures are rarely very clean. So I'm just thinking, is there another way of looking at it? I looked at it earlier today. I thought, well, that's an absolute mess. I mean, it just looks corrective to the upside. So I think what we can consider is that all of this potentially was the A wave. Yeah, that's what I'm tracking for some other coins. All of this as A wave, and now we're coming down in the B wave. And I'm making that change because of all these previous swing lows and this kind of triple bottom structure. These often don't hold. Okay. Does it mean we have to now see that larger retracement? No, not really. It doesn't mean we have to. But yeah, it is just, it seems like a probable scenario. But then, I mean, it's an absolute mess. Okay, so the move to the upside would probably be a WXY structure. That's how I would track it. No, an ABC itself. So wave A is a 3-wave move. A, B, C in A. Just to explain that. There will be, there are many other interpretations of this. Honestly, that you can come up with a lot of different scenarios. That doesn't mean any of this is particularly predictive. I just try to explain to you what at the moment for me seems to be the most likely Elliott wave structure. And just the pure fact that there are so many different potentials tells us it's not a reliable one, okay? So just be careful here. I mean, I've been highlighting for weeks that we've only really been moving sideways, which is still the case, and that this is not a very desirable pattern to trade unless you have a different edge, but not from an Elliott wave point of view. But still, I know you come here for the structure. So but best I can tell at the moment is that this is unfolding. So we have a wave 1 and a wave 2. And this here is an A, B, C structure in wave A. So the A wave topped, and this is now the B wave before we go higher. So that's what I'm tracking at the moment. Can also add the 38.2 retracement, just because sometimes pullbacks are shallow. So at least you have an additional level to watch. And that means we have the following levels. We have Fibonacci support between $2.03 and $1.75, so 4 levels to watch there. Structural support here at $2.12 without any reaction, and additional structural support in that $2.03 area. So there seems to be some confluence. And yeah, I mean, it might be this, that we're coming down in ABC structure now based on the micro patterns, but it would take a break above that last swing high at 225 to indicate a low of sorts is in place. So yeah, please note, super messy, super choppy structure. It will likely change going forward. And certainly not based on any impulses to the upside. But yeah, we will continue to track until we see really something that's clear. At the moment, all we have to do is to track some levels. Short-term trend seems to be down from the recent high, but is still potentially intact upside reversal pattern from the 7th of April low. That's the update on XRP. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.